Welcome to the presentation of Trading Equities on London Stock Exchange. My name is Brian Schwiger. I am the Global Head of Equities of London Stock Exchange Group. Today, the presentation will cover four areas. Why trade equities on LSE? What are the equity products and their volumes on our markets? What are the available ETF and ETP products and their trading volumes on the LSE? And finally, how to access these markets. Now let's start with the first point. Why trade equities on the LSE? I think there are four main reasons. First, the LSE has a wide range of products. About 4,000 equity instruments, including shares, depository receipts, and ETF and other ETPs. They give investors exposure not only to the UK, but also to other global economies, covering both developed and emerging markets. These include companies that are global conglomerates, as well as vibrant small and medium enterprises. Secondly, the LSE is the most liquid primary exchange in Europe. Every day, over £5.3 billion worth of UK-listed securities are traded on our market. Despite the fragmentation of European market structure and competition from other trading venues, over 70% of UK lit order book trading still happens on the LSE, where investors can find deep liquidity and tight spreads. Thirdly, our time zone. Trading hours of the UK is from 8 a.m. to 4:30 p.m. London time. It is between the market hours of Asia and the US. Asian investors can start trading the UK in their afternoon after their home market closes. Some Asian markets like Hong Kong and India could have overlap with the UK trading hours, which provide unique opportunities for investors. Equally, the UK has a couple of hours overlap with US markets every day, which can benefit investors with certain trading strategies. Finally, being such a diverse and global economy, the UK provides opportunity for diversification for equity investors. Its blue chip index, the FTSE 100, with over 70% of its revenues coming from outside the UK, has been performing well. Let's look at the chart on the right-hand side. We normalized some major blue chip indices from the beginning of January 2016 to see how they have performed through to October 2017. The UK's FTSE 100 index, the dark blue line, went up 20%. Comparatively, the FTSE Eurofirst 300 index, the light blue line, which tracks the 300 largest companies by market capitalization in the FTSE Developed Europe index, was up 8%. The US blue chip index, the S&P 500, in green on the chart, went up by 26%, and China's CSI 300, the red line, went up 7%, while Hong Kong's Hang Seng, the orange line, was up 29%. Looking at the global picture, the UK is an investment destination which can offer valuable diversification. Here we will take a closer look at the UK indices. We mentioned the FTSE 100. The FTSE 100, sometimes referred to as the FTSE, was established in 1984 and is made up of the 100 largest UK-listed companies by market capitalization. It is the dark blue line on the chart, and it went up about 20% from the beginning of 2016 to the end of October 2017. During and after the volatility surrounding the referendum in 2016, when UK voters voted to leave the European Union, the FTSE 100 showed some real resilience. It is a testament to the international nature and sector diversity of its issuers and the institutional nature and long-term outlook of its investors. The light blue line represents the FTSE 250 index, which covers mid-cap stocks traded on the LSE. It went up 16% during the same period. The FTSE AIM 100, the brown line on the chart, went up 52%. The FTSE AIM 100 features the largest 100 companies on the LSE's alternative investment market, also known as AIM, for growth companies. All these major UK indices have shown strong performance. Today, investors have an increasingly global outlook. This presentation will provide you with the information on the LSE's equity products, their liquidity, and market access. As we mentioned earlier, over 70% of the revenues of the FTSE 100 companies came from overseas in 2016. As you can see from this slide, about 25% were from North America, 25% from Europe, and 21% from the rest of the world. Less than 30% of those revenues were actually generated in the UK. This bar chart shows over 90% of the revenues for FTSE 100 companies in the basic materials, technology, healthcare, and oil and gas sectors are earned from outside the UK. In other industries, including consumer goods, industrials, financials, telecoms, consumer services, and utilities, the overseas proportion of the company's revenues were also significant. We can say that the FTSE provides truly global diversification to investors. It is also one of the reasons why it has had resilient and strong performance. Next, we will take a look at the equity products and their volumes. About 4,000 equity instruments are available for trading. These are mainly categorized as shares, depository receipts, and exchange-traded products. There are over 2,000 listed shares with aggregate market value of over £4 trillion. About 1,000 companies are on the AIM market, the growth market for small companies. Our issuers operate in more than 100 different countries. Over 500 listings are incorporated outside the UK. Depository receipts are traded on a dedicated market called the International Order Book, also known as the IOB. We have 263 instruments whose issuers are from 35 countries. In particular, 55 securities are incorporated in Russia, making IOB the largest market in Russian instruments outside of Moscow. About one-third of the securities are from Asia, mainly Taiwan, India, and South Korea. Last but not least, exchange-traded products, also known as ETPs, have seen tremendous growth in the past couple of years. We now have over 1,300 ETPs from 25 issuers listed on the LSE. 11 of these are our QFII ETFs, which give investors direct exposure to Chinese equity and fixed income markets. LSE's share of trading accounts for 45% of the total European ETP market. In the first 9 months of 2017, assets invested in ETFs listed in Europe increased 31%, reaching a new record of $751 billion. London Stock Exchange has the biggest turnover in equities among Europe's primary exchanges. Every day, over £5.3 billion worth of UK-listed securities are transacted on our markets. Despite the fragmented market structure in Europe, LSE enjoyed over 72% share of trading in UK-listed securities on lit markets in October 2017. I believe many investors are familiar with the concept of market fragmentation in the U.S. In this slide, you can see, for example, in October 1998, about 90% of the S&P 500 stocks were traded on listed venues of the NYSE or NASDAQ. But in October 2017, only 25% were on these venues. Most of the liquidity in the U.S. is traded on alternative platforms, which is the opposite experience for the UK. In Europe, MiFID, the Markets and Financial Instruments Directive, went live on the 1st of November 2007, promoting transparency, competition, and investor protection. In February 2008, 96% of the FTSE 100 turnover was on the LSE and 4% on alternative venues. Today, in October 2017, the share of trading on the LSE was 69%, which is still more than twice the value traded on alternative venues. Here are the most traded companies of the FTSE 100, ranked by average daily turnover from January to October 2017. We can see that the most liquid names such as British American Tobacco, HSBC, and Rio Tinto are well-known brands and come from well-diversified industries. Many of these stocks are listed or traded in multiple venues and time zones. For example, HSBC, Prudential, and Standard Chartered are listed in both the UK and Hong Kong, and many of these names have ADRs traded in the US. Let's look at the industry weighting of the FTSE 100 and 250. The industries which are most heavily weighted on the FTSE 100 are the financials at 23%, followed by consumer goods at 19%, and oil and gas at 14%. For the FTSE 250, the biggest industry is still the financials at 35%, followed by industrials at 26%, and consumer services at 18%. Besides the blue chips and mid-caps, many investors are interested in growth companies. LSE's alternative investment market, AIM, is one of the world's most successful growth markets. Here are some figures. From 2014 to 2017, average share price increase of the companies which joined AIM was 54%. In the last 10 years, average market cap of AIM companies increased from £41 million to £97 million, and their average money raised at IPO rose from £23 million to £62 million. In the last 3 years, 76% of all capital raised in European growth markets was through London's AIM. AIM is also very international. In the past 5 years, 96 international companies floated on AIM. In total, 17% of AIM companies are incorporated outside of the UK. Let's look at the industries of AIM companies. Among the total capitalization of £100 billion, 18% comes from consumer services, 17% from financials, and 16% from industrials. Some of the companies grew from small enterprises to industry giants. The table on the right shows the top 10 AIM companies by market capitalization in September 2017. For example, ASOS is a global online fashion and beauty retailer. It was admitted to AIM in 2001 raising £300,000 with a market capitalization of £12.3 million. Today, it has grown into a company with a market capitalization of over £5 billion. Another example, Hutchison China Meditech, the holding company of a pharmaceutical and healthcare group based primarily in China, was admitted to AIM in 2006 with a market capitalization of about £140 million. By the end of September, as shown on the table, the company had grown to £2.4 billion. In October, it successfully conducted further issues, which made it a company worth over £3 billion. Moving to the International Order Book, the IOB, a dedicated market for global depository receipts, also known as GDRs. IOB offers cost-efficient access to some of the world's fastest-growing markets through 263 GDR instruments from 144 issuers of 35 different countries, mainly Russia, Taiwan, India, South Korea, and Egypt. Investors can trade in the currency, rules, and settlement regimes that they are familiar with. Securities are denominated in US dollars, can be centrally cleared at the London Clearing House, and are settled in Euroclear. IOB's daily turnover is $354 million on the order book. The table on the right shows the 10 most traded IOB companies. The majority are Russian companies, with Samsung Electronics, the most liquid from Asia, trading at about $21 million per day. The graph on the left shows the daily value traded for Samsung Electronic GDRs for both its common shares and preference shares combined, and the GDR share price of its common share line, SMSN. We can see a growing trend for both the turnover and share price from the beginning of 2016. Samsung Electronics started trading on the London Stock Exchange in GDR form in 2001. It has its own price formation in London after South Korean market closes or during trading holidays in the local market. Its turnover in London is about 6% of its turnover in the South Korean market. According to the feedback from our investors, the GDRs and Samsung Electronics have provided them with trading and hedging opportunities when the local market is closed. The overlapping trading hours between the US and the UK has also helped to enhance its liquidity. As an important part of LSE's equity product suite, now let's take a closer look at the LSE's exchange-traded products, which include ETFs, exchange-traded funds, ETCs, exchange-traded commodities, and ETNs, exchange-traded notes. Globally, ETP assets have been growing 25% annually since 2003. Assets invested in ETPs listed globally reached a record high of $4.3 trillion in September 2017. Assets invested in ETFs listed in Europe have increased over 31% in the first 9 months of 2017 to reach a new record of $751 billion, accounting for 17% of total global assets. Equity ETFs gathered a record level of $51.5 billion of net inflows in the first 9 months. Fixed income ETFs had net inflows of $22.8 billion, which was less than the same period last year, and commodity ETPs net inflows were at $7.6 million, again less than last year. LSE is a market leader in ETPs. By the end of October 2017, we had over 1,300 ETFs and other ETPs from 25 issuers. They are available in 6 currency lines: pound or pence sterling, US dollars, euro, CNY, Hong Kong dollars, and Swiss franc. LSE's on-exchange share of trading takes 45% of all ETFs traded in Europe. 20 registered market makers constantly provide two-way prices, and over 200 member firms participate in the trading. London Stock Exchange Group was voted the most proactive ETF exchange in Europe and the largest exchange for ETFs in Europe at the 13th Annual Global ETF Awards in New York. Our order book activity for these products is rapidly growing. In 2016, our order book turnover neared £100 billion. By October 2017, £77.3 billion were traded on the order book with an average trade size of £38,000. We have seen a 94% increase in order book turnover over the past 5 years. Looking at the number of products by asset class and trading currency, you will see 56% of our products are equity ETPs, followed by 22% commodity and 17% fixed income. In terms of currencies, many people may not know that 50% of the products are traded in US dollars. Pound sterling and pence sterling denominated products combined only take up 42%. The most liquid ETPs on our order book are again equity products, mainly tracking the FTSE 100 and S&P 500. For fixed income, products tracking emerging market bonds, corporate bonds, and high-yield corporate bonds are among the top 3 in terms of liquidity. And for commodity ETPs, the most traded ones track gold, silver, and oil. In order to access such a wide range of equity products on the London Stock Exchange, here I would like to give you an overview of our trading services. There are 3 trading services: SETS, SETS-QX, and IOB. SETS is our flagship electronic order book. It allows market maker executable quotes and provides central counterparty clearing for anonymous pre- and post-trading. Investors can access both lit and dark liquidity on SETS. Through the mid-price pegged order, for example, one can rest orders pegged at the mid-price of the primary market bid and offer and interact with both lit and dark contra liquidity. Instruments traded on SETS include the FTSE 100, FTSE 250, FTSE Small Cap Indexed Constituents, ETPs, and liquid AIM securities. SETS-QX is designed for securities less liquid than those traded on SETS. It combines continuous quote-driven market, supported by market makers providing two-way quotes, with 5 electronic auctions at 8 a.m., 9 a.m., 11, 2 p.m., and 4:35 p.m. Last but not least, the International Order Book. It is dedicated for the trading of global depository receipts using the same underlying technology as SETS. Market maker executable quotes are enabled, and almost all securities are traded in US dollars. Given the UK markets are open between the trading hours of Asia and the Americas, investors from around the world can easily participate during UK trading hours. The 2 major regular trading sessions of SETS trading services start at 8 a.m. and finish at 4:30 p.m. Before the market opens in the morning, there is a 10-minute opening auction call from 7:50 until 8. In the midday, there is a 2-minute midday auction. After regular trading in the afternoon, the closing auction runs from 4:30 to 4:35 p.m. After that, investors can still trade for another 5 minutes at the closing price during the close price crossing session. Auctions can represent as much as 30% of the LSE's daily turnover. We also provide various order types to trading participants, including market, limit, stop, and stop limited, which are familiar to many brokers and investors. Recently, icebergs and hidden orders such as the midpoint that we spoke about earlier are becoming increasingly popular. If you are interested to see how these order types work, please visit the London Stock Exchange website and consult your brokers. The LSE has 353 member firms which can help you access our markets. The LSE is an international stock exchange, and many of our members have parent companies outside the UK, such as the US and Asia. In 2015, LSE plc was granted licenses by the Hong Kong Securities and Futures Commission to provide automated trading services in Hong Kong for LSE equities and derivatives. We have seen an increasing number of member firms from Greater China, 11 so far in total. Please contact your brokers if you are considering accessing the London Stock Exchange markets. We hope this presentation provides you with an overview of our equity products and markets access. If you have further questions, please get in touch via this contact. Thank you for listening.